Bismillahirrahmanirrahim. Assalamu alaikum. Welcome to Mastering Accounting Skills. Today, guys, I am bringing to you another very important topic: accounting for bank loans and lease contracts. In this video, we will see how to record bank loans and lease contracts as per International Financial Reporting Standard. The content what we will discuss in this video is what IFRS 16 says about leasing contracts, what is the loan valuation summary and why we need to prepare this summary, then amortization schedule, why it is important to prepare amortization schedule for the bank loans and the lease contracts. Then finally we will see the accounting entries for these loans. Now we will see what treatment IFRS 16 provides us to record the lease contracts in the books of accounts. IFRS 16 has replaced International Accounting Standard 17. Under IFRS 16, now lessee is required to record the right of use the asset and the lease liability against that asset. Means the asset you have acquired through the lease contract, now you will record it in your books of accounts as an asset. You will depreciate that asset, and also you will record a lease liability for the unpaid amount of the loan in the lease contract. So this is the treatment what IFRS 16 will provide us. So you need to record an asset and create a liability account. Now we will discuss what is loan valuation summary and why we need to prepare this valuation summary. So here in front of us in Excel we have two loan summaries. One is for business finance and the other one is an auto loan summary, okay, auto lease contract. So as you can see here, this summary for business loan, you can see it is providing us the loan amount, that how much loan you have acquired and what is the processing fees and the total loan of the amount. The total loan amount means this processing fees, if you did not pay this plus this, it will be your total loan amount, and the installment plan for how many years you have the plan, 4 years, and number of installments, how much you need to pay, 48 installments, and what will be the interest rate and what will be the method used to calculate this interest rate. It will be diminishing balance method or the straight line method. So what bank is following the method to calculate the interest rate. So this summary will give us the complete detail of this amount. And for the auto loans summary, if you see that we have acquired a Toyota Hiace, its price is 85,000, its invoice price value, okay, and the down payment what we make for to acquire this van, it is 7,000 we paid, and the processing fees is 815, and the total loan amount will be this, okay. How we get this? Invoice value plus the processing fees minus the down payment what we make, okay. So this will be the loan amount what we need to pay in how many years, 4 years, and how many number of installments, 48 installments per month, one installment. So for the 4 years we have 48 installments, and what will be the profit rate charge. So this information 7.46. so all these information normally some banks they are providing when you are signing a contract with them, they are providing you all the details if in the lease contract. If you don't have all this information in lease contract, anything missing, so you can call your customer relationship officer and you can get these details. So as you can see, these summaries we are preparing because this summary provides us a comprehensive overview of the loan. What is the loan amount, what is the processing fees, and what is the rate of interest, and how many number of installments you need to pay to clear this loan. Secondly, it will also help us to record the initial journal entry that we will see at the end of this video under accounting entries for the business loans and lease contracts. A question may be arise in your mind that if bank is providing us all of these details, then why we need to prepare this summary? First thing, if bank is giving us this information, so it will be in the paper format. And secondly, this will in the paper format, it will not be on the single page. You will get this information. You need to go through and read all the lease contract pages, and then you will get these information. So it will be easy for you that when you took this loan for the your recording purpose, in your amortization schedule file, you will make this small summary. So it will give you information for all of your loans, okay, in on one page. It will give you all the information. Otherwise you need to go to the file rack and then bring out the file and then bring out the lease contract, relevant lease contract, then go through all the pages, and then you will get this information. In future, anytime you need to go to the file, okay. So that's why we are preparing this valuation summary to save our time. In next slide, we will see the amortization schedule. What is amortization schedule and why it is important to prepare the amortization schedule? So here in the same Excel file, I have here next to this loan valuation summary, next sheet is amortization schedule. Okay, so here we have two schedules. One is for the bank for the business finance, and the other one is for the auto lease contract. So as you can see, this amortization schedule, it is giving us the information month wise, okay, that in which month we get this loan, okay. In June we get this amount loan, and the first installment we are going to pay in August, and the total number of installments, how much for each installment. It is giving us the schedule is giving us the information for the principal payable amount, opening principal payable amount for the each month, and the closing principal payable amount for the each month, okay. Month wise we have here complete schedule. And what is the interest payable? Total interest payable, we have this much, 6,471, and how much the interest in this installment, monthly installment is 979.09, and in this installment we will pay the principal amount this much and the interest this much, okay. Total this both of these amounts, it will be 979.09. so this will be our monthly installment. And after making this payment, our principal payable amount will be this, and the interest payable will be this, okay. So 6,471 minus this interest, so this will be our remaining interest, and this is the principal payable amount. We will not deduct from this principal amount, this 979, we will deduct this principal amount payment only, not the full installment payment we will deduct from this. So as you can see, this schedule is month wise giving us complete detail, okay. If you want to check your books of accounts, that how much interest I have recorded, what is the proof, so you can go through here. Again, all this information you can get from your lease contract. But to make your work easy, every month you cannot go to your lease contract and go check there how much interest I need to record, how much principal, and some of the lease contract are not giving us complete details. They will just give you the installment amount 979, this installment amount they will give, and they will write down the interest rate, how much they are charging, but they will not give you month wise this amount, okay. So that's why we are going to prepare this schedule. This schedule is giving us complete information that when we have started in August, how much installments remaining, 47, then 46 in September, then 45. So at any point of time you can check that if you are in March 2021, so you can see, okay, this much we have paid and now principal amount is payable 34,579 and the number of installments remaining 40. Okay, when this loan is going to finish, you can also track in this sheet that this loan will be finished in July 2024. Okay, so similarly this is for auto lease contract. Okay, as in the loan valuation summary we see how much we took the loan, 78,815. so this 78,815 is here. Okay, in December 2020 we get this we sign this lease contract, we get the van, and then in Jan we paid the first installment. Okay, so after making this installment payment, this 47. So this summary, it is providing you the information how much you need to record interest every month, how much you need to record principal payment for the loan. Okay, so that's why this summary is important, that we can easily get the figures, we can easily track how much loan we have we took and how much we paid, how much installments remaining, how much is the interest we paid, how much the principal amount we paid, and what is the principal amount payable balance. So this schedule is giving us complete information. We have the month opening for the interest payable and for the principal payable, then installment is split in interest, principal amount, and the monthly installment total amount. Then closing balance, principal amount payable is separate, interest payable is separate. Okay, this is for the record purpose. Interest payable we are not creating in the books of account, we are not creating interest liability, just we are on the time of payment we are recording each month interest expense. This we will see in the accounting entries for the loans and lease contracts. Now finally we will discuss the accounting entries for the business loan and the lease contracts. So to record the liability, when you took the loan for business, either for the business finance or for the auto loan, you need to create the liability and record the asset. So as I told you before, that the business loan summary, what we have prepared, this will help us in recording the accounting entry to record the liability. So now you will see how it is helping us. So now we need to record the loan. So what entry we will pass for the business finance? 40,000 we took, so we will debit our bank account with 40,000. Okay, and the bank service charges with 525. And then auto loan, sorry, this is by mistake, this is not the auto loan, this is the business loan. Okay, so you can write here business loan account, you can correct this by 40,525, you will give credit. Okay, so bank will be debit, bank service charges will be debit, and all the total of this you will give credit to the business loan. Then second entry for the auto lease. For the auto lease, your automobile, its value, invoice value is 85,000. So you will give debit in the fixed asset automobile account, and then you will give debit to the bank service charges 850. Then you have make a down payment also. So this is a little bit change as compared to the business finance. Here you make the down payment from by cash or by bank, you will record it, give credit to the 7,000 amount to the cash account. Okay, if you paid cash, then the auto loan account will be 78,815. Okay, as we have defined in the auto loan summary. So by looking to this summary, you can pass this entry easily. Okay, that how much amount you need to give debit to your asset account, what is the processing fees and the charges, then cash account, that for the down payment, and then finally auto loan account you will give credit. So this you will record the liability, okay, and create the asset. In next slide we will see how to record the monthly payment of the loan. So normally what accountants do, they are they are passing these wrong entries, okay. For the business loan they will just give loan payable, they will make debit with the total amount of the installment, and the bank account they will give credit, okay. For your bank account this entry will be correct, your bank ledger will be will give the correct result, but this if you give loan payable debit by 979 total amount, this is wrong. Similarly for the auto loan also, some accountants they are just passing the entry, they are giving credit to the bank and total amount of the installment they will give debit to the loan payable account. So it is not like this. I will show you how to record this entry correctly. As I have explained you that in the loan valuation amortization schedule, you see that in this each installment there are two amounts. One is the principal payable amount, okay. In this 979 there is principal amount what we are paying in the month of March 2021 is 759.40, and the interest expense is 219.69, okay. So this is your interest you need to record as an expense, and this 759 you need to give debit to your loan amount, okay. So your loan will decrease by this amount, not by 979, and the bank account you will give credit with the total amount of the installment, okay. Similarly for the auto loan also, the principal amount what you are paying in this 1903.80 is 1431.57. So you will give debit to your loan account with this amount, not total amount of the installment. And the interest expense in March 2021 you have this 472.23, as you can see, and you can match these figures in this loan schedule. Come to the March 2021. See, in March 2021 we have this 472, this is the interest amount, okay. So you can track this also from the your amortization schedule. Okay, and then finally bank account you will give credit with the total amount of the installment. I hope the knowledge we have discussed in this video will add value to your professional skills. To know more cool accounting skills, subscribe my channel and stay connected. Thank you.